Meanwhile, just as economists have marked down their Q3 growth estimates, along comes today's retail sales report suggesting that consumer spending might be on better footing than previously thought. That sparked a reversal higher in bond yields, which had dropped after the soft CPI report earlier this week. You can see the 10-year there up around 1.33%. Does the retail sales data mean the Fed is likely a go for tapering this year? And if so, is that really a headwind for stocks? For more, let's bring in Michael Schumacher. He's head of macro strategy at Wells Fargo. And Julia Coronado is founder of Macropolicy Perspectives. Good to have you both. Michael, am I extrapolating too much from this week's bond moves?
Maybe a little bit too much. So our take on it, Kelly, is yes, the number today was good, but really these short-term data, almost impossible to forecast from month to month. I think you got to look at the longer term picture, and we still think the market is taking its cue from the Fed, in particular tapering. Is that going to happen this year? We think so. And at that point, we do think bond yields go up, but probably not too much until that actually occurs.
Yeah. Why is it that they wait until the taper actually happens?
Well, the Fed's been a lot of talk and not so much action with respect to tightening policy now. We've heard speech after speech from Fed leader after Fed leader, and Chair Powell in particular has been swatting away these tapering questions. So I think it's a bit of fool me once, okay, fool me twice, that's on me. So people really want to see that move before they do things like put in big short positions or position for yields to go substantially higher at this point.
Interesting. Julia, do you think the report this morning was a game changer?
No, not a game changer, but I think it does demonstrate resilience. I think that, we have seen the Delta variant weaken the momentum in the recovery, but there's no real risk that it's going to derail it. So I do think that the Fed is on track for tapering later this year. We are expecting it at the November meeting, and we expect next week that will serve as what they call advance notice. They will tell us that they're, if progress continues to be made as expected, that they will be on track for tapering in coming meetings. So I think right now for the market, it's more about how long is the tapering, what is the shape of the tapering, and what is the rhetoric in terms of how does Chair Powell tie together the tapering and prospective future rate hikes. And we saw him in Jackson Hole. He was plenty dovish. And I think to Michael's point, he wants this to be a non-event. He wants us to get so tired of anticipating it that once it finally comes, it's like, okay, finally it's here. And I will just add one final point, which is, remember that they're going to be tapering their bond purchases as issuance is also tapering. So the net tightening isn't as significant as it would be otherwise.
Shepard Smith here. Thanks for watching CNBC on YouTube.